Hey everybody, it's Megan and Rick, and we have Louis back on for 2026. Louis Vasquez of
Yay.
Vasquez and Associates. He is the guru of taxes, of fixing problems, of planning for the future, of saving you money, being smart with your investments. Louis is our personal advisor, and he is available for some but not all, but you can reach out to him and he can see who would best serve you if you're looking for some advice. Hi, Louis.
How you guys doing? Thanks for having me again,
Good.
Megan
Hey,
and
Louie.
Rick.
Yeah, no problem. Okay, so Louis, 2026 is here. It's February 3rd, and it was kind of a long January, but here we are cooling off here in February. And there's some new tax laws, rules, things that have passed, things that were permissible before, but not permissible. Just kind of confusing. So I was hoping that in a nutshell, you can let us know for our savvy real estate holders out there what kind of changes are this year that would affect them.
Yeah, that's a great question. I think the most impactful for anyone that lives in California, pretty much regardless of if you are involved in real estate, own a business or not, is going to be the state and local tax. State and local tax, SALT.
Mm-hmm.
SALT, state and local tax. Uh, that deduction has gone up rather significantly. So this is what's essentially happened. Okay. When Trump came into office, he capped that state and local tax at $10,000. So the state and local tax is a combination of your state income tax that you pay the state of California, whatever state you live in, the state of California, your DMV fees, and your property taxes, all of your state and local taxes you pay. State taxes to the state of California, DMV fees for your vehicles, and then the local taxes of the property taxes that you pay your county, which for us homeowners, higher income earners, that can add up very quickly. But Trump capped that at $10,000. So if I'm a household and we're making, $150,000 a year, we own a condo in Ladera Ranch. Okay, we're making $150,000 a year. State taxes, you're probably just in state taxes alone paying over $10,000 before we factor
Mm-hmm.
in DMV fees and also property taxes. So I'm a we have a nice condo townhome in Ladera Ranch that we bought for a couple hundred grand. We're making 150 grand, so we're paying 15 grand very likely just in state taxes. Probably spending another 10 grand in property taxes, and then if we have two cars, it's probably spending another grand. So we're probably spending 26,000 dollars. That was capped at $10,000 when Trump. That was one of his first things he did back in 2017. That has now been changed. The cap is now $40,000. Forty thousand
Mm-hmm.
dollars. So you're gonna really want to add up how much money am I paying in my state income taxes plus property taxes plus DMV fees. It used to be $10,000. Now that's up to $40,000. It's still capped, but now it's capped at $40,000. So for a lot of people, I would expect to see higher refunds if you're used to getting refunds. This should be a rather impactful change for
Mm-hmm.
us in California, just because it's so, California nowadays, post COVID, you really got to be for real to live in California.
Mhm.
Mm-hmm. Mm-hmm.
So,
Yeah.
question, Louie, is that for 26 this year, or is that back to 25 as well? Or is it just new for
20,
26?
yeah, it's a great question, Rick. We're always with your taxes, you're always kind of a year behind. So even though we're live living in 2026, it will start
Hmm.
impacting. We're in February 2026, so everyone's starting to get into filing for last year 2025. So it's
Right.
impacting us 2025 last year and your filings live in 2026. So, does that make
Okay,
sense or
so
is
that
that confusing?
$40,000 deduction. So if you had those deductions that exceeded $10,000 in 2025, you're good now up to 40,000 in 2025.
That is
That's a
correct.
big
That is
difference.
correct.
It's a huge
It is a
difference.
big difference. It is a big difference. It's a big
Yeah, because
difference.
why buy real estate if you don't have any write-offs? I mean, that's like ridiculous, right?
Well, yeah.
Yeah, yeah, yeah. There used to be like there's
Mhm.
still a cap on mortgage interest, which hasn't been adjusted. So there's a little bit of a cap on mortgage interest, but
How much is that
750 is the cap on mortgage interest. You can
on the
only
loan amount?
on the loan amount, yeah, on the loan amount.
Uh,
There used to not really be a 2010 was my first internship. 2010 in the height of at the height of the recession. 2010 I was at a firm. There used to not really be a cap on the state and local tax deduction. And there also used to not really be a
mhm.
cap on mortgage interest to the degree it is now. And then also 2010 property values were very, very affordable. uh Everyone who would make money, the partner would always say, "Go buy more real estate. Go buy more real estate." I was like, why does all these people, why buy? And he was just trying to get deductions on there. It would make sense for a lot of people to just go out and buy a second home or rental home. It'd make a lot of sense just because you get the extra deductions. But here we are, 2025. It is not 2010 anymore. 2026 now. We're in 2026. Yeah, it would be that much more of an incentive to pull the trigger if I'm kind of on the border of whether I should or I shouldn't in terms of the now I can get a higher deduction because of property taxes are now very likely going to be 100% deductible. There are some
Mhm.
limits with income. There are some limitations once you get into income. Off the top of my head, I think it's like 350 grand jointly. I think it's like 200 grand single. There are some limitations if we're getting into certain income levels, but the majority of people married filing jointly are in California are below that
Mhm.
350 married filing jointly. So this should be rather impactful, guys. Rather impactful.
Mm-hmm.
So then, if somebody's over that income cap, how does that impact their tax liability?
Yeah, that's a great question. It pretty much there's like a reduction on it. You don't get the full
Mhm.
40 based off of how
Mhm.
much. Yeah, a little bit of a calculation. You could get all the way reduced depending on where you're at. You could get reduced all the way back to the 10. But
Not likely though, right?
I we don't do a whole lot of personal tax filings for like the common folk, but I would expect to see articles and people just talking to people saying, "Oh yeah, my refund was way bigger this year than it was last year."
Mm-hmm. Mm-hmm.
So
Now, you mentioned this 750 mortgage interest rate cap, and then Rick said 750 loan amount. I don't know what you guys are talking about. So 750 what? What's going on with this?
yeah, it's a great question. This is like it's kind of like it's interesting how they didn't adjust this, and the reason why is because the only real states that have homes over 750 grand are really just coastal states. The majority of middle America aren't approaching 750 grand. So this is what the way it works. If I buy a home for $1 million, let's say I buy a home for $1 million and let's say I finance the whole thing. I think they have that for VA loans. If I'm a veteran, I
Yeah.
can pretty much buy it outright without.
Right.
Mm-hmm.
Yeah,
Right.
okay. So, I did my tour of duty in Camp Pendleton, San Diego, and now I want to live in San Clemente. I want to live in South County. I want to live in northern San Diego. So I find a home, a condo for $1 million, 0% down. My debt on that home is $1 million. So in terms of taxes, I can only deduct up to $750,000 of mortgage principal.
Mm-hmm.
You mean
So
interest?
that on the interest. So
Mm-hmm.
we'd have to at the end of the year, $1 million debt of mortgage principal debt that was serviced over the year. You get your tax form, IRS form 1098. You get that form. We can only
Mm-hmm.
take the $1 million home, $750,000 limit. We can only pretty much take 75% of whatever that form is saying that you paid in mortgage interest.
Gotcha. Okay.
So it's kind of
But
like
they
a
can still take the full
proration.
benefit of the property taxes, though. So in other words,
So yeah,
on
right,
that
right, right,
on that
right.
$1 million condo, the taxes are probably $12,000 a year. Now they can get the full 12,000 benefit. even though they're
There,
capped at the 750 on the loan amount for the interest
yeah,
expense.
right. There's a certain, if you bought a home before a certain I forget which year. I want to say it's like mid tens. If you bought a home before a certain year, we'd have to double check. It does go up. I think it goes up to $1 million if you bought a home before a certain year. But pretty much if you bought a home after the mid tens, correct. I'd have to double check on that. If you
Hmm
bought a home
hmm
after the mid tens, we're essentially at that $750,000 of mortgage principal. So it's a way to not so it's like, okay, I have one home. Let's say I bought a home in Mission Viejo or something like that, 15, 20 years ago, and my what's left on the mortgage is only $750,000. You know, people are always looking for deductions. You can't go out and buy a vacation home in Lake Havasu and then think that you can second home. You think that you could write off the mortgage interest and property taxes for that second home. It's a way to kind of stop people from trying to go out buy a bunch of homes, second home that are non-rental homes, and thinking that they're going to get deductions. But it does impact people. Does impact coastal states, Washington, California, on the East Coast, New York,
hmm
New Jersey, even to a degree. So yeah, great question, Megan. Great question
Very
on that.
interesting. That's why I'm not allowed to give tax or legal advice. I'm just a realtor. That's why we have you. Okay, I have a question too. I heard that that PMI is deductible now. Is that true?
Mortgage insurance,
Yeah.
hmm
potentially. It either is or it isn't. I'm not 100% sure. I don't think it is, but maybe it is. I don't know. I didn't.
I could have sworn.
I
I know
don't
I
know
should have told
enough.
you
I
that
don't
one
know
ahead of
enough.
time.
Yeah,
Because that's. Uh,
I'd have to double check. I'd have to double check on that one. But
mm-hmm,
for
mm-hmm.
but for I don't think it is. I don't think I'd have to double check though.
All right. Sorry.
Yeah, good question. Good question.
I should have asked you that ahead of time.
No problem.
Okay, what else? What else, Louis, should we know for 2026?
Yeah, if you're trying to fool around with creativity, uh, so tips and overtime are now deductible if I'm let's say I'm a full-time employee, part-time investor, full-time employee, part-time, entrepreneur. I just haven't reached full-time business owner, entrepreneur status.
hmm
I'm doing the 9 to 5 for somebody and then doing the 5 to 10 for myself. Uh, so the first $25,000 of tip and overtime income, the first $25,000 is now not taxable. So the first $25,000 is not taxable.
Tax
There
exempt
are
on the first
tax
25,000.
exempts. Yeah, you're still gonna pay Social Security and Medicare taxes. You're still gonna pay
Yeah,
payroll
yeah,
taxes. It's still gonna get you on that because they need to fund that disaster of a system. Um, but
gotcha.
yeah, so it's calculated on your personal filing. It's nothing that your employer did for you um through payroll. Your payroll situation was carried on as is. So uh if you're a business owner and you're getting people asking you about your if you're a business owner and people are asking you, they get tip income or overtime, hey, where's my deduction? It's on your personal tax filing is where you calculate
hmm
it.
hmm
And that's a pretty cool benefit. As far as the tip income, there is some limitations to industry. Uh so we have a industries are specific in terms of which industries don't qualify. So you just want to double check on make sure your industry does. But that should be also impactful for those employees out there who are getting some tip income and getting and working hard getting that overtime.
Mm-hmm.
Hmm.
Yeah. Is that like, I mean, I wonder why they decided to not make you pay taxes on that. Like if you're, I don't know, having I guess 25 grand isn't gonna, I don't know. I'm just wondering about that. Like, do they think it's like a business startup or a second job, or maybe because their hourly wage is usually pretty low, so to leave the tips without too many taxes. I'm just kind of was wondering about that.
Yeah, I just think it's just to get a little bit more cash flow into that demographic of people who's, probably
Mm-hmm.
day to day making just enough to get by. So just a little bit more cash flow into their pockets to,
Mm-hmm.
if I give them a little bit more cash flow, it's just more cash that they're going to be able to spend. So we're going to get the money from somebody.
Right. Yeah. Exactly.
Yeah.
Okay.
So
What
I
else
mean,
should we know about?
yeah.
yeah, we kind of touched on it in a last session. I have a full hour of content on our website. If you go to our website, we have a video section. I don't have the YouTube page that Rick and Megan have. Okay. I have about a quarter of what Rick and Megan have, but I do have a video on our YouTube of all
I'll
the
post a link
highlights.
to this too.
Sure, sure, sure. For your real estate investors, what I would probably say would be, if you own commercial, on the commercial side of things, um, a lot of the interior improvements that you make, like HVAC, electrical improvements. So let's say, I have a commercial something, commercial. So it would be either I'm a landlord, and it would also be if I'm a tenant. So some of your viewers are very likely potentially even tenants.
Mm-hmm.
Any type of internal improvement. So let's just go back to that HVAC example. So let's say the
Mhm.
HVAC, we need to completely improve our HVAC, and they're quoting us at, $50,000. Typically, before the tax update, I would take that $50,000 and I would write it off over a period of time, very likely 20 years. So
Mm-hmm.
even though I'm out of pocket the 50 grand, I don't really get a $50,000 deduction. I get a $50,000 divided by 20, whatever that math is. I'm an accountant, but I just can't do math in my head. So I get a couple grand a year deduction over the course of 20 years. So I'd have to write that off over time. They have, for commercial side of things, any type of improvements done by the landlord or a tenant improvement, they've gotten rid of that overtime period. It is now 100% in the same year that I enter into the contract. So if it's 2026 and I'm a tenant of maybe I worked something out. I'm running a company in a location, and I'm working something out with the landlord that, hey, I'll cover this improvement for you in exchange for, a better contract. Or if I'm the landlord and I'm looking to do something, I could improve it, and then now I have a big deduction on my tax filing that could potentially be impactful for me. So that what I have not looked into is trying to clarify the definition of a commercial property. So would a commercial property be like, could a big residential unit be classified as a commercial? Where I have to double check a little bit more to see if that would work, but
Mhm.
I think what they're trying to do is just on the commercial side of things is I think they're just identifying that this is potentially going to be a distressed
Mm-hmm.
side of things, and they're trying to implement some things to incentivize continued commercial investments.
Yeah, if you're a small sandwich shop, like we had a really great sandwich shop around here, and the AC went out, and the owner didn't want to replace the AC. It was this whole thing, and the sandwich shop said, "We're out of here then," because
Yeah,
they're selling
sure.
Mhm.
sandwiches. That's like an AC for a commercial building is a ton of money. So yeah, that would
Yeah,
definitely
right,
be really
right.
helpful for small businesses. That's good to know.
Yeah, we have an HVAC company that they've been out with us. They started it in 2020 during COVID, and they've grown. We've been there every step of the way. They've literally used this to close a deal because they I let them know about this, and then they brought it up to the proposal, and the guy on the other end wasn't aware that he can 100% take this in the same year. That was essentially what helped them. close the deal
Hmm.
because the HVAC company knew about it, despite the landlord not getting the memo.
Yeah, yeah, not being in the know. Obviously, not listening to our podcast. All right, Louie. I think that pretty much covers some big ones. Unless there's anything else you want to tell us, I think that's a good wrap.
Yeah, I mean it's just fun stuff. Continues to change. We'll see what happens. We're in a freaking government shutdown.
Yeah, yeah.
So I'm hoping this gets figured out. The IRS is defaulting into like a 2 week clause that keeps them funded for 2 weeks. But God helps us if this turns into another month and a half. I think it's going to potentially impact people's filings. I wouldn't be
Mm-hmm.
surprised if they extend it for everybody just because of this.
Yeah. Oh, yeah.
Yeah.
Wow. I'm slow on the news. I just looked it up. I'm like, oh yeah, the government shut down. I stopped watching the news a while ago, but yeah, that's not good. It's not
Yeah,
good
wow.
for a lot of things. So,
Yeah,
oh boy, oh
it's like
boy. All right.
something like a million pieces of mail during that no it was October through the middle of November. It's like something like a million pieces of mail that's piled up in the IRS's office that they're still going through
Oh
because
wow.
they were shut down in this last shutdown. Now they're going to get shut down again. It's tough. It's tough, especially if you're, in the middle of an audit or
Mm-hmm.
an appeal, or if you your last accountant messed up and someone else is now helping you and you amended. So it's just the bureaucracy we have to deal with. It's an
Yeah.
unfortunate situation.
Mm. Well, that's terrible news. Boy, oh
Eventually,
boy.
they'll get the IRS all in AI, and there just won't exist anymore. It'll just be an AI system.
Yeah. Well, as long as it's in our
That'd be
favor.
easier. Yeah,
Yeah.
that's all
Yeah,
they care.
yeah.
Just show
All
us
Trump's
the
all
right, you
money.
for it.
guys. Thanks, Louie, so much for joining
Yeah, no
us again.
problem.
And I'm going to put a link to your website, to your video section
Sure,
here,
sure.
and then I'll push it out to everybody so they can check it out and get more information.
We're always happy to, at the very least, take a look at what you got, what
Yeah.
your viewers have going on, your clients going on, and at the very least, we'll point them in the right direction. At the very
Yeah.
least.
I love that. I appreciate that.
All right, you
All right,
guys,
everybody. We'll see you
take
next
care.
Okay, thanks,
time.
Louie.
Take care.
See you, bud. See you, man.